Hello everyone, week 3. Before we get to some different types of business organizations, let's talk briefly about ethics. I know you're all going to be taking an ethics course, it's required, but let's talk a little bit about business and ethics. You should know what ethics is, and you should know the difference between law and ethics. You also should know why are ethics important in the business world. And to be quite crass, it helps you with the bottom line. To be ethical is a good thing, and it helps you with your profits. You should also know who sets the tone in any organization for ethical behavior. And obviously, the tone starts at the top. In the book, in their chapter 8, we talk a little bit about corporate social responsibility. The things you need to know about this particular section are profit maximization, shareholder or stakeholder approach, and corporate social responsibility. And you should know the difference between the three of them. Obviously, profit maximization means your whole purpose of having the organization is to maximize the profits for your investors. Stakeholder approach is slightly different, where you must consider or should consider not only your investors, but your employees and the society in general. And then corporate citizenship is we even take one step further, where corporations undertake to help solve society's issues. And so we've got three different types, three different levels of corporate social responsibility. Let's talk now about different types of business organizations, and we'll talk about several. This is important for a number of reasons. Some of you may be interested in starting your own business, but you also should understand the different types of business organizations available to businesses in the United States. The simplest form of a business organization is called sole proprietorship. And interestingly enough, most businesses in the U.S., something like 90%, are actually sole proprietorships. You do not need government approval. You do not need state approval. Anybody can form a partnership. So if I want to start a dry cleaners, I can just open up as a dry cleaners without anybody's permission. Some of the advantages of a sole proprietorship, obviously, are they're very flexible, very easy to start, and you get to keep all the profits. You don't share it with anybody. You don't need anybody's approval to make business decisions. The other advantage of a sole proprietorship is that there is a single tax. All the profits you make in your business go into your individual tax return. There is no separate organization tax. The biggest disadvantage of a sole proprietorship, as I've said earlier, and Daniel's going to edit it out, the major disadvantage of a sole proprietorship is you are responsible and liable for all of the losses in the sole proprietorship. Another form of business organization is a partnership. A partnership is whenever you get in an organization with at least one other individual. The advantages of a partnership are very similar to those of a sole proprietorship. That is to say that you share with your partner the profits of the organization. They are relatively simple to form. You don't need government approval. And there's a single tax. So all partnership profits go on your individual tax return. The major disadvantage of a partnership, and one of the reasons why they're not as popular as they once were, is that not only are you liable for your own losses, you are responsible for the losses and liabilities of your partners. And we'll talk about limited liability corporations in a minute, but that is one of the major disadvantages of a partnership, and the reason why they aren't as popular as they once were. A franchise. You're all familiar with different franchises, McDonald's, Subway, just to name a couple. Franchises are business transactions governed by contract law, which allows somebody to use another corporation's or another organization's trademarks and trade names. So again, for example, you can be a franchisee of a McDonald's franchise, where McDonald's Corporation is the franchisor, and you are the franchisee. You are given a license to use the name and the products of McDonald's. As I said, it's governed by contract law. What you should be familiar with are some of the major terms in any franchise agreement. And I'll list them, and then we'll talk about each briefly. Payment terms, location terms, and quality control terms. In any franchise, there's usually an upfront fee, a one-time upfront fee. In McDonald's Corporation, currently the upfront fee for a franchise is somewhere in the neighborhood of $1 million, a one-time fee paid up front. In addition to that, the franchisor, in my example, McDonald's, will get a certain percentage of your sales as a fee. So for example, if the royalty fee for the sales is 3%, 3% of your sales goes to McDonald's Corporation. So you've got the initial upfront fee, and then you've got ongoing royalty fees based on sales. Location is one of the more argumentative issues in any franchise arrangement. That is, how many franchises can you have within a certain distance? Obviously, from the franchisor's perspective, they want as many franchises as they can get because they get the upfront money, and in addition to that, they get the ongoing royalties. However, you as a franchisee, after spending $1 million, do not want a McDonald's a block away. So location issues tend to be very contentious in the arena of franchise agreements. The last major term you should be familiar with are quality control issues. When McDonald's or Subway grant a license to use their name, they have a vested interest in making sure that your operation is clean, that your operation meets all the high quality standards, because their reputation is at risk in the franchise arrangement. Limited liability corporations. This is a hybrid type of organization which has all the benefits of a partnership, primarily single tax, and the advantages of a corporation, which is limited liability to the investors. LLCs, limited liability corporations, are a relatively new type of business organization, and once again, they're a hybrid. They've been around for maybe 10, 12 years. They are a creature of the state. By that I mean that you must get state approval to form a limited liability corporation. And while the standards are very small and very minimal, you do need to get permission from the state. And as I said, the advantage, primary advantage of a limited liability corporation is the limited personal liability of the members, the owners, the investors. You also have a single tax, just like a partnership or a sole proprietorship. So your limited liability corporation as a separate entity pays no tax. The major disadvantages of a limited liability corporation is that every state law is somewhat different, and there's no uniformity in limited liability corporations. The other type of business organization that you're probably most familiar with is a C corporation. These are the IBMs of the world, the General Motors, the Hewlett-Packards. These are the large corporate entities. Again, you need the blessing of the state to form a C corporation. So depending on the state where you're incorporated, you need state permission to incorporate. Three major types of personnel in a corporation are the shareholder investors, the board of directors who represent the interests of the shareholders, and the corporate officers. And we'll talk more about those next week when we talk about corporate officers and directors. Corporations are separate legal entities. They can be sued. They can't sue in their own name because under the law, they are deemed to be corporation or corporate persons. Major advantage, again, of a corporation is the limited liability of the investors. Unlike a LLC, however, corporations pay a tax. So a major disadvantage of a C corporation is double taxation. The corporation gets taxed on its profits, and the investors get taxed on the dividends which are distributed to them. So double taxation. You should also know about different forms of financing a corporation. The simplest type of financing is your own positive cash flow. If you have positive cash flow, you don't need the other forms of financing. The more obvious types of financing are stocks, equity in the corporation, or bonds, which are a form of debt, or you can go to your bank and get a loan. So you've got equity, you've got bond, you've got bank loans, and you've got your own positive cash flow. And again, the benefit of a cash flow is you don't need to give up ownership in your corporation, nor do you need to get a loan or go to bondholders for debt. Mergers and acquisitions. These are forms of business combinations. A merger is when one company acquires the other company. So if Company A acquires Company B in a merger, Company B goes away. It's as if Company B never existed. That is called a merger. Consolidation is when Company A and B form a third company called C. In both of these types of business combinations, you need both board of director approval of each company, and the shareholders of both companies must approve the merger or consolidation. Another type of business transaction is called the purchase of assets. In this type of transaction, the buyer only acquires certain assets of a corporation. The ownership of the corporation stays in the other company, and some of the liabilities, and most of the liabilities, also stay in the other company. So for example, a division of General Motors may be sold off. The ownership of General Motors remains, but they sell off all the assets of a particular division. Let's say their transmission division. And Company B buys a transmission division of General Motors. The other thing, the other type of business transaction is called a purchase of stock, more prevalently called a tender offer. Don't see these too much anymore, but the tender offer is when a company tries to acquire a second company and is rebuffed. And so the acquiring company will go to the stockholders of Company B and offer to buy their stock at a given price, called a tender offer. With that, let me just end with, if pro is the opposite of con, what's the opposite of progress? Have a good week, everybody.